Good afternoon, good afternoon, good afternoon. My name is Sean Dex and I welcome you back to the Mango Grove. It's another gorgeous day outside. The birds are chirping, the dogs are barking, and the S&P looks like it's crashing. But what does this mean for Bitcoin? Is it gonna bounce or is it gonna follow? In today's video, I'll be answering a few of the questions that I was getting all morning long. I'll also be giving you guys an update on CHAINLINK right after we do our Bitcoin USD analysis. So if you are interested, you definitely want to watch the rest of this video. See. And here we have it, the S&P 500. As you guys can see, it's already taken a big drawdown this week. I do believe around 4% from top to bottom. Yes, 3.95% to 4% may not seem like a lot in crypto land, but a significant amount in the traditional markets. Now, we have also done something different that has people buzzing, has at least my friends talking with excitement, with anxiety, call it what you will. But let's go ahead and point out what everybody should be looking at. I'm not looking at it too much. As you guys know, I'm not a pattern trader, but we do have a obvious pattern staring us in the face over here. Now, there are multiple ways to draw it. I'm going to draw out both and give out both opinions. Now, should I draw it on the weekly or should I draw it on the daily? We'll start with the weekly. I do believe we can. We have these candle closes over here and these candle closes over here. We're going to mark out those candle closes, the tops over there, right? You can extend it if you want, but let's just keep it like that. Then we're going to use these guys over here and those guys over there. Okay, now you can call this a rising wedge if you want. Call it what you will. I don't care what names you guys give it. As you can see, we have broken this down to the downside. That being said, the week hasn't closed yet, but this looks pretty conclusive to me. Now, this is one way to draw it, which is, in my opinion, the way to draw it. A few of my friends were drawing like this, right? And this was a few weeks ago, of course, and I disagreed with that. But now, to be honest, this doesn't look like I wouldn't disagree with the outcome of this pattern, right? Because the argument over here is you have one touch here, those two touches, a touch over there, a touch of few over here. That is valid. Then the breakdown, which doesn't look like much of a breakdown to me, the retest, and then the follow through, right? That's the other way to look at it. But hey, let's keep it simple. Let's draw it like this, and we have the breakdown here. Now, there is a few interesting things that is going on over here that makes this very, very ugly, and we can switch on over to the daily, right? And let's go ahead and try and get this in equilibrium over here. Hit the auto. Okay, so as you can see, we've gapped down, right? When we had this candle over here, it was actually a gap down, and that is a very, very bear sign. But there's more that's going on over here, and I do want to point this out because this is what I think people are missing. Okay, I'm going to use trend lines. This is not how people this is not how it's supposed to be done, but this is how I'm doing it, just because visually it's going to help you guys understand what's going on over here. I'm going to mark the underneaths of these candles over here, and the underneaths of these candles over here. Okay, watch the orange trend lines, the brand new ones that I'm drawing. You guys see this channel here, this empty channel over here, right? I'm going to go ahead and mark this out. This is a gap that is gapping two price action zones, right? This is essentially a gap island. You could call it a gap island. Well, that's what it's called. But since we have the toppy price action over here, right, you have a high and a high, a reversal kind of pattern. This is known as a gap island reversal. That actually is coming in right on the break of a rising wedge. And now when I see patterns within patterns, that is when I put more weight into patterns, right? And this breakdown over here, gapping into a breakdown, by the way, not looking good. A gap island reversal into a rising wedge. You have your toppy formation over here as well, not getting to the top of the wedge either, not looking good at all. Now, here's the thing, right? Everybody is looking for continuation over here, and they are probably shorting this, and I wouldn't be too excited to do that just yet, in my opinion, through a technical analysis perspective, especially if you're highly leveraged, because again, a lot of eyes are going to be on this, and I wouldn't be surprised if you do get some kind of action to, one, fill the gap, right, and also take out those high leverage short positions that enter the market very, very late, the late shorters. So what's going to happen here? You're going to fill the gap. You're also going to get the retest of this pattern over here to see if we do re-enter into this, right? If we do re-enter into this rising wedge, and hey, maybe nullify the breakdown, invalidate the breakdown. This pattern also does have a measured move that we can go ahead and draw out. Now you can draw it from this area over here, of course, but I like to take the more conservative approach, and I like to use the highest high in a rising wedge, which would be either one of these guys would be fine. I like to use this guy over here, take from the top and right to the bottom of the wedge, somewhere around here would be fine. Again, you don't need to be perfect with this. Go ahead and line that up right over here. What do we have? And it's coming up to around 267, right? Okay, now that's enough for patterns. We leave this over here, but I do want to look at what the mango ribbon is saying. And when I do look at traditional markets, I like to look at the weekly, right? So let's go ahead and okay, so what do we have here? 267. Is that lining up with the mango ribbon in any shape or form? And yes, the Kijun is coming right over there. Jesus Christ, that's actually on point. We also do have the Tenkin, and look at price is actually sitting right over there on the top of Tenkin, resting on the Tenkin. And what does that suggest? That suggests a possible bounce, and that bounce could actually show us a test off the top of this wedge. Now if we do break down and lose the Tenkin over here on the weekly time frame, then I'll be looking for that move all the way down to 268, which is the Kijun, and also lines up with the top of the wedge. Now you guys see what I mean, right? That you don't really need to use patterns, you don't really need to learn all of this stuff. And honestly guys, in time it will come anyways, right? If you keep learning, if you keep improving your trading, constant improvement, constant growth, the mango way, right, you will get there. But in my opinion, in the beginning, it's best to focus on the things that are least subjective and more objective, right? Which is why I do love the Ichimoku. People think that the Ichimoku is more of an advanced thing, but in my opinion, it's the best for beginners. Okay, so yeah, because you know what beginners should be concerned about? Beginners should be concerned about risk management and not the easiest way to make profits. That's what you guys should be concerned about as traders who are just starting off. Regardless of whether it's difficult or not to learn something, if it is worth it for risk management, learn it. And this is the best way, guys. This is the best way. Anyways, enough of that rant. I do think that traditional markets may see a bounce over here, test that wedge, fill that gap, even the 21 EMA on the weekly coming in around there. So getting that test over here, then coming in and then losing the Tenkin, then I would be looking for that follow through to the downside. This leads us to the question we talked about in the beginning of the video, the question that I've been getting all morning. What does this mean for Bitcoin if we do see a collapse over here of the traditional markets, collapse all the way down to 268, 267-ish? What does that mean for Bitcoin? Will money be flowing into Bitcoin, or will Bitcoin also follow? And people seem to be getting excited that traditional markets are dumping because they think that money is going to flow from traditional markets into Bitcoin because Bitcoin will be the safe haven asset. Now, I believe that people are either one, being very premature on that idea, or two, severely misguided on that notion. Because I believe that there's a very simple approach to all markets across the globe by major market participants. And that is, hey, we are either risk on or risk off. That's primarily because there's so much correlation now across all markets, primarily again because of volatility hunting, and that again, that's a topic for another time. But if traditional markets dump, market sentiment is going to shift towards risk off, right? It's by design, it's by human nature. If market participants are across all markets going risk off, Bitcoin, crypto markets are also going to be risk off. Now, that doesn't mean that there's no possible way at all that Bitcoin doesn't see a move towards the upside while traditional markets see a move towards the downside. Okay, and I will talk about why we may see that in a bit. However, it is just in everyone's best interest that all markets go up, at least for now, until Bitcoin establishes itself, right? If traditional markets are in risk on, crypto will be in risk on, alt markets will be in risk on, and Bitcoin will be in that risk on environment and sentiment as well. Okay, now let's talk about the scenario where traditional markets see a slow, prolonged down period, a grind, a crash, the recession that everybody is talking about. If we see that and Bitcoin actually starts moving on over to the upside, in what scenario, in what mindset, in what sentiment, in what market sentiment would that happen? In my opinion, it would happen because people are chasing yield. And what do I mean by chasing yield? I'm going to try and explain this as simply and briefly as possible. Let's say you have around $50,000, $100,000, and you show up to your bank account and you're looking to deposit it into a savings account or whatever, and you're expecting around a 3% interest rate, a 5% interest rate over a period of time. And your financial institution guy says, okay, thank you very much for your money. The interest rate you're going to get is minus 1%. And you're going to be like, wait, what? No, I was looking for at least 5%. He's like, well, that's not what you're getting with this account. And you're going to be like, okay, how do I get 5%? And then he's going to show you riskier assets to invest in to be able to get your 5%, right? Now, because as a society, we are cultured for so long now to be getting these kind of interest rates, these kind of returns, these kind of yields, right? We are going to be like, okay, I'm going to do whatever it takes to get that yield, right? I'm going to do whatever it takes to get that interest rate because that's what I'm used to. So instead of being risk management first and thinking about how you can protect your 50,000 or your 100,000, because you should be benchmarking it to that minus 1% interest rate, you are instead benchmarking it to the 5% that you're used to or the 10% that you're used to, right? And you're going to chase assets to give you that. You're going to chase riskier assets. In that case, people are going to be more open towards Bitcoin. Now, I'm not saying that's a bad thing. I'm not saying people being more open to Bitcoin is a bad thing at all. In fact, that may get them to start questioning this asset, looking into it. Because now when you look into Bitcoin, when you do your research into Bitcoin, by the way, suddenly you're like, oh shit, what have I been missing out on, right? And in my opinion, Bitcoin is the best bank account long term for your money, guys. And I could go into a rant on this, but I shouldn't. I think I've already spoken on this far too long. Let's actually talk about some Bitcoin and some actual analysis of the crypto markets. But that's essentially my opinion on when we will see traditional markets see a drawdown while Bitcoin is going up. It's because people are chasing yield while also at the same time discovering what Bitcoin is all about, right? Because in an effort to chase yield, in an effort to get those returns that they're used to, it will get them to look into the possibility. But as for Bitcoin being a safe haven, I don't think we're going to see that sort of mindset until we stop seeing the volatility that we are currently seeing in Bitcoin. But then again, volatility against what, right? That's another long discussion for another time. We've talked about this enough. Let's go ahead and talk about Bitcoin. By the way, guys, if you guys are interested in this sort of stuff, you guys want me to talk about this more often in the future, leave a comment down below. Let me know your thoughts, and I'm glad to explore these topics with you guys. Anyways, let's go ahead and look at Bitcoin. What the hell is Bitcoin doing? Here we have Bitcoin on the 4-hour chart on Coinbase. As you can see, not much has really changed in terms of the ranges being we haven't seen resolution, right? We haven't broken to the downside for 8,200. At the same time, we haven't even gotten to the top of our 8,700 range is what I'm looking for, right? To the top side, we did see the upthrust, right? We did see this upthrust. We got past 8,340, closed the 4-hour candle above there, and this actually happened right before the day could close, right? So that was a sign. Now this, you could call this I think people call it the three raven pattern or something like that. You have 3 bearish candles moving down and then a pop towards the upside. I don't know if that's going to pan out or not, but we do see these 3 candles coming down towards our support line over here at 8,220-ish, somewhere around there. Again, same rules as yesterday. As for my trade, I'm looking to flip bearish and take the short side of the trade only if we break 8,200 towards the downside, right? I'm looking for a 12-hour candle to close, a daily candle to close, or 2 4-hour candles. Until we do that, I'm not really too interested in in taking the short side. I'm still in my long trade all the way from here, added over here, looking for around 8,700 at the very least. Looking to cut the trade too if I get the right signs. Until then, not really interested. We can go ahead and look at the 12-hour. Do we have anything? Oh, actually, I do want to talk about this, right? On the 4-hour, I shouldn't just dismiss that. We do have a possible descending triangle forming over here, or you could look at this as a Adam and Eve double top or something like that, right? We haven't really double topped, but to me it's the psychology of what's going on, right? Up thrust up, an attempt to break to the upside, failed. Second up thrust up, attempt to break to the upside, failed. Understand the psychology, don't try to memorize patterns. If we break to sort of downside, I'll be looking for at least a move to, again, conservative approach, at least to 8,000ish, right? 8,005. Definitely come in, test 8,000, and maybe make another high if we off Aussie follow through and sweep 7,000s, right? If I do take the short side, I'll be probably playing for follow through, and if we see the bounce, I'll be cutting that position. Okay, so that's how I'll be looking at it. Again, you guys got to plan your own trades. This is not financial advice. Let's go ahead and look at the 12-hour. 12-hour doesn't look as bad, right? 12-hour simply looks like we're ranging between this zone and this zone over here. Let me go ahead and put this dotted line. You guys can't see it, but I'm doing it for my own reference. So this is like a range within the range right now, very tight. Not something that is very tradable at all, in my opinion, not unless you're playing the very low time frames, which is fine. Again, our head and shoulders, not even sure we can call it that, but hey, it is valid. I do think it is valid because we do have, so it depends on how you want to look at it, right? If you're looking at this as a double bottom head, then yes, this is definitely valid. We talked about this in yesterday's video. Please go ahead and do check it out. We do have the proper volume profile too. It does all line up. So if this does break to the upside though, right, we haven't really seen that wick touch to the touch here just yet. So let's see if we do have a bounce over here and then a touch over here. We do have actually another hour and a half to go for this 12-hour candle to close. So if we do touch that there before then hey, perhaps we have a chance of breaking this to the upside, and then this will be going up. We measured this yesterday to around 9,200. Okay, so that's it for the 12-hour. Again, guys, keep it simple. Go ahead and look at the weekly. What's going on over there? Let's hide all the horizontals. Looking really ugly. Turn on our Ichimoku, and we do have a rejection of the Kijun at 8,512, and we do have the 55 EMA lining up right underneath us. So that is our range for now, right between the 7,700 and 8,500. I also do want to point out the monthly before we move on to CHAINLINK. We have the 12 EMA underlining price action right now. We did come and test it, found some support over there. The question is, can Bitcoin hold that as support? The 12 EMA and the 10 SMA are going to be my pivot lines to judge whether we are going to be switching to a bear trend on the longer time frames, or should I stay with my bullish mindset that hey, this asset is just getting started. All right, so now let's go ahead and talk about Link. Here we have Link on the monthly, looking really strong over here. Again, testing the monthly 12 EMA and bouncing right off. We have the 10 SMA here, the red line, and the 12 EMA, getting the cross of the 10 SMA and the 12 EMA, looking really good. Link on the higher time frames as well. We can switch on over to the daily. Link meeting all our targets, right? All our targets. We can go ahead and hide the mango ribbon for now. Doing exactly what we talked about yesterday too, closing above, testing it, and seeing continuation now towards the upside. Now here's the thing, we do have some resistance here that, if you guys did watch my first video on Link where I marked out all my horizontals, how I planned out this trade, right? Please go ahead and watch it. By the way, guys, you guys will get a glimpse onto how you guys can catch these kind of moves over here. We're like more than 50% up right now, and let's go ahead and yeah, this is the line that I decided not to use, right, as a horizontal, now as a resistance line rather. So you guys can keep that on there if you want to, because we are finding some resistance over there, but I don't know, I still don't fully want to use this. I just think that this price action over here kind of negates it, but it is valid to put that in there. But here's the thing, guys, this looks like accumulation going on over here against a major resistance level that a lot of people have their eyes on, right? I'm wondering if this could simply be a bait, just like it was over here, right? Just like it was over here. Let me go ahead and okay, there you go. Just like it was over here, but the reverse of it. Over here it was a bait to get people into price after breaking out, and then got dumped on, and this kept going. I'm wondering that we have the reverse happening over here, where they bait people into thinking, hey, this is a major resistance level, people sell, but instead what we see over here is accumulation going on before the next leg up. Okay, now again, this is just a thesis, right? And I could be wrong, and for me to know I'm wrong, I'm going to look for signs of distribution instead. And over there we can find signs of distribution on our oscillators. We're going to look for bearish divergence on our different time frames. We're going to start with the 1 hour, move on to the higher time frames. So on the 1 hour we are seeing those signs, right? We are beginning to see those signs of bearish divergence, but then again I'll be looking for that on the 4 hour time frame. Once I start seeing that over here on the 4 hour time frame, I'll be like, okay, time to get a little bit more careful with your trade, Sean. That's why you need to predefine your profit targets. I have taken some profits off here already, but the question is, should I take more profits, right? That is the question. Or should I be looking to add to my position? I'm willing to do that too if I do see the signs. All right, so that's it, guys. A quick update on everything that we talked about. Chainlink, again, just continuation from our position all the way down here where we took it based on 170 based off the 12-hour Ichimoku, Tenkin, and the 21 EMA. Now it's riding the trend, adding and taking profits as we go up. As for Bitcoin, let's go ahead and clear everything out of here. We do not need the oscillators. And so yeah, Bitcoin coming and tapping into the liquidity zone over here. The question is, do we see the bounce? We don't need that. This is the wrong chart. My perpetual switch over here. So yeah, the horizontal, yeah, we are still on top of the horizontal over here at 8,220-ish. We are closing the 12-hour in exactly 1 hour. If we break down, easy for me to just get out. If we bounce up, I'll have to stay in the trade, follow my rules. We could be seeing a descending triangle over here. If we do break down, I don't know, if we do bounce over here, get that rejection somewhere around here, then I'll be looking to play towards the downside, perhaps, but again, I'm going to stick to my rules for now. I'll see how this price action unfolds. I don't want to get sucked into the lower time frames at all, so you know what, I'm not going to be playing that descending triangle. I'm going to be watching at the very least the 12-hour, but for the most part I'm going to be looking at the daily. Okay, just make my life easy, guys. The mango way, the stress-free way. You trade the same way. Keep it simple, guys. Think about it, man. You got out of that entire 9-to-5 grind, or you're looking to get out of that 9-to-5 grind to be able to trade to live a more stress-free life, right? You don't want to be stuck in front of the computer and watching it every single goddamn minute. Again, not to put people down who do that. You guys love doing that. By all means, keep doing it. But if you're finding yourself stressed out by doing that, don't do it, man. You don't need to. Trading is supposed to be a joy. Trading was the best thing that I could have done for myself. Learning how to do this. Being able to become a consistent, profitable trader was probably the most valuable skill that I learned for myself. And a huge part of that was also learning how to be stress-free. Again, I'm going to stop with the rant. Trade it the mango way. Trade it the stress-free way. I'll see you guys in tomorrow's video. If you guys enjoyed our discussion in the beginning of the video, leave a comment down below on your thoughts as well. I'd love to know what your thoughts are, guys. Don't hesitate. Don't be shy. And hey, I will see you guys in tomorrow's video.